Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Qs, which is the Nasdaq ETF, basically representing the tech sector. And as I do each and every week, I've left my lines on the chart so you can see how the forecast worked out. And right here was last Friday's candle. And I said because of the length of that candle and because of the increase in volume, we would most likely see a continuation of buying early in the week. And then I said towards the end of the week, we would most likely see a pullback. And what happened? Well, on Monday, we gapped up. On Tuesday, we continued higher, but at the same time formed a red candle as we pulled back from resistance right there, which is the line that I drew from the high back on the 16th of May. And lo and behold, where are we now? We're right at my target price. I said we would pull back, and the end of that line, as I do again each and every week, is the target level. So what does that mean for next week? Well, if you look at the stochastics down here, this is the percent K, that's that blue line. It's starting to move lower. And yesterday, down here, the CCI, that's the Commodity Channel Index, yesterday it crossed below the 100 mark, which generates a sell signal. So I think next week we could see lower prices in the Qs as we pull back to fill this very minor but significant gap in the market. Gaps generally fill about 80% of the time, and then after they fill, there's another 80% rule that we follow, and that's where the gap fills and then reverses. So I'm going to initially state that the market will most likely pull back to fill the gap. Whether or not it bounces from there, we'll have to see, because that would most likely take place sometime the week after options expiration. And so I'm going to leave it just like that. Now, if we go to the Russell 2000, which is a more broad-based index, I said that we would most likely rally up to resistance. Again, Friday was right here. We had a very close to a bullish engulfing pattern. Monday and Tuesday, we hit my target and then just kind of hung out right there at that high. With today, Friday the 14th, the market closed with what's called a bearish harami. That's when you have a smaller red body candle that falls within the previous green body, and that tends to be bearish. Now, looking at the stochastics here, you can see that we're extremely overbought, but the CCI has crossed today with a sell signal, so most likely the CCI is going to continue lower. I'm forecasting that the stochastics will also fall to a low level, and I think that the price action next week for the overall Russell 2000 is going to be lower, just like that. So I'll leave that in place for you so we can track that next week to see what the results were. And we're really hitting on all cylinders. The forecasts have been very accurate over the past months, and I hope you're enjoying these reports. Now, if we go to the spiders, that's the SPY, it's the S&P 500 ETF. I said that we would most likely go up early in the week. We did that Monday and Tuesday. We did not hit this existing resistance, but we did pull back. And today we have what's called a doji. That's a perfect doji. That's when the market closes exactly where it opens, and it forms somewhat of a cross right there. And you can see stochastics overbought. The CCI crossing with a sell signal, so it's going to be the same story right across the board. I think we're going to pull back. And for the spiders, I think we're going to pull back to at least the 20 period moving average, which is going to be this blue line right here. So the SPY could pull back to around 283.76. That's my forecast, with the end of that line being my target. Now, with that said, the VIX is a contrarian indicator to the S&P. I said we would most likely pull back. We did that. Today, on Friday the 14th, right there, we were showing a red candle. But if you look down here, the stochastics are oversold. Now, this is getting very interesting. I'm going to have to erase all these lines to make it very clear for you. The VIX could actually drop a little bit on Monday to test this support level before it rallies. Now, because the VIX is a leading indicator, that could push the markets up a little bit on Monday, but I think overall the VIX is going to rally, and I think the S&P and the rest of the markets are going to pull back, like I mentioned before, especially in the Russell 2000, which is a more broad-based index. So let's keep that in place, with the end of that line being my target for the VIX. Now finally, if we look at the diamonds, that's the Dow Jones Industrial Average ETF. Let's start off with the stochastics. It's overbought, but the CCI is crossing with a sell signal. Said we would move up early in the week. We did that on Monday and Tuesday, and then just kind of flattened out. So I think we're going to continue lower with the rest of the markets to eventually test that 20-period moving average. Now, this line right here is a former forecast line that we can get rid of because that hit that target. But if you notice, there's a gap down here on the diamonds. I think that's going to be our first level of support that we could most likely test. And then we'll have to see whether or not it bounces off of that gap fill support level. So that's our forecast for this week. If you'd like to learn more about what we do at the Market Guys, just go to themarketguys.com. Pretty easy. And if you have a question about our mentoring program, understand that next week on June 21st, which is the first day of summer, we do have one opening coming open on the 21st. So if you'd like to inquire about that spot for a mentoring program, it's one-on-one, just email me right there. Just click on contact. That will bring you to a form where you could just type in your question or phone number. We'll reach out to you, see if you qualify for that mentoring, and then we can get started in the beginning of summer. We're having a good time in the markets right now. It's been a rough week for a lot of folks that really aren't using risk management techniques and strategies, but we can easily overcome any of the losses if we stick to the charts and put a plan together for trading, especially for the option traders. It's been a really good market. And next Friday is options expiration week. So for those subscribers, we are going to be putting out the expiration week alert either Monday or Tuesday, preferably Monday. So that's it. Have a great weekend. Happy Father's Day to all the fathers out there, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.